Last time, I did a brief video explaining the ICC strategy that I use and apply in all my trades. In the responses I received, it was clear that many of you wanted more than just an overview. Most of your comments showed interest in having a full course, something detailed, something structured, something that walks you through it properly instead of just touching the surface. So I've decided to break it down slowly. We are actually going to move step by step from beginner to intermediate to advanced. No rushing, no skipping foundations, and we will start with how I personally understand market structure. From there, we will touch on indication, then we will move gradually into corrections, continuations, and finally, I will dedicate a full video to showing you how exactly I take my entries, how I set my stop loss, and how I determine my take profit. This will not be a random, information. It will be layered. Each lesson will be built on the previous one. And of course, if you're a beginner, this is definitely for you. If you sometimes look at the chart and feel unsure about what price is actually doing, this is also for you. And even if you already trade but you lack confidence in how you understand market structure, do not skip this, because many traders think that they do actually understand structure, but they only understand parts of it. And when your foundation is incomplete, your decisions become inconsistent. So, as I mentioned before, this strategy is used by trades by Sai, and I am not here to claim any ownership of the concept. I'm just here to explain how I understand it, how I apply it, and how it fits into my trading system. So, every trader interprets information differently. So what I'm sharing is my structured understanding of the concept and how it translates into practical execution. Now, before we go into entries, before we talk about profits, before we talk about the risk, we need to understand the base market structure. What is it actually, and why is it very important? Market structure is simply the way price moves over time. It could be over 1 hour, it could be over 4 hours, it could be over a year, it could be, over different duration. And it is the pattern created as price rises or price falls or price pauses and continues, because you're going to realize that these are different things that the market actually does. Sometimes it's going to rise continuously, and sometimes it's going to fall continuously, and of course sometimes it's also going to do what we're going to talk about, that is consolidate or range. Market structure basically shows you who is currently stronger. Is it the buyers that are stronger, or is it the sellers that are stronger? Who is dominating the market right now or at a particular moment? Is it the buyers that are strong, or is it the sellers? Okay. It also shows us, whether the market is pushing higher, pushing lower, or moving sideways without a clear direction. I want to go into more details of trying to explain the definitions or what it actually is. I want us to get right here so that you guys can actually see it, see how I view market structure and how I understand it from the concept that I've gotten from ICC. So what we're going to be looking at as the first thing is something we call trends. Okay. So remember, this is one of the ICC strategies. So I'll just write it here, ICC strategy. So guys, be very keen on this. So when we're looking at trends, we have uptrends and downtrends. And I want to explain it to you so clearly and in a very, brief manner so that you can be able to understand how I view it. So we have different things that I want to show you. We have a market, the way the market moves. We have, let's say, the market will move from this point to this point. That's the first movement. Okay? So what we are getting right here is what we call a high Okay, this is what we call a high. Okay, and this we can call it a low. And this could actually, just be depicted by just one candle like this. Like that. Okay? So I want you to see, to actually be able to understand an uptrend per se. So we have the market giving us a high, then it does something like this. Just a second. Just does something like this. So this is actually a high, okay? Then the market comes down and does something again like this. Okay, so what is this? This is another low, and this is another high. So if you just think about it, and it's very easy to understand, this is another low and this is another high. But if you look keenly, you're going to realize that this low is actually higher than this one. Okay, and this high is actually higher than this one. So this one becomes a higher high, because I've seen many people tell me, Ali, how do you know it's a higher high? How do you know it's a higher low? Like, what makes you understand it? So that is what I'm trying to explain. And this is definitely, is going to benefit most beginners, guys. So this one now becomes a higher low. So it is common sense, guys. I want you to look at this. This is a low. This is a high. This is another low. Okay? And this is another high. But this low is higher than this one, so it becomes a higher low. This high is higher than this one, so it becomes a higher high. And that is what the market will do in all time frames. In all time frames. Whether it's 1 minute, whether it is 1 hour, whether it is 1 year, as long as it's in an uptrend, it's gonna now eventually form what we call higher highs. Okay, so we'll have a higher high, we'll have we'll have another higher high right here. We'll have another higher high. Okay, so and now here you're going to have another lower low, another lower low. I mean, sorry, another higher low, higher low, higher low. You can even write HL. Okay, you can even write HL. You can just write HL like that, so that we don't fill up the whole space. So take your time, look at what I've just drawn right here, and understand it. Why is it called a higher high, and why is it called a higher low? This is a low, this is a high. This high is higher than this one. This high is higher than this one. So at the end of the day, there's one thing you're going to realize, guys. This movement is going to be depicted in all time frames, and I'll explain that in a few. So this is what happens. Okay, before we go there, let's now look at this is now the uptrend. Okay, so you now understand why this is a higher high. It is higher than this one, and this is higher than this one, and this is higher than this one. And for this low, this is higher than this one. This is higher. It is that simple. Now you're trying to understand the basics of market structure. So it is very keen that you just understand this. Now, when we go to downtrend, many people just hear people saying lower highs, lower lows, and they're like, how do you see them? How do you understand them? Okay, and I want you guys to clearly look at this and try as much as possible, watch it keenly and try to understand it. So We have this point and we have this point, which, okay, which can be depicted by, if let's say it's a candle, it would be a candle that looks like this. And depending on how your chart looks, for example, it would be like this one candle. But let me just explain. So this is a high, okay? This is a high, and this is a low. It is just the same thing we did in the first one, but now we are looking at it from a point of, it's like the inverse of this, okay? It's like the inverse of this, but let me just explain it. So this is a low, this is a high, and this is a low. So how do we go about it? So the market now will move, and it will not take out this high, okay? This high will not be taken out. It will move until that point, then on this point, okay? So now what will happen is, what do you realize? You're going to realize that this point is a high, but it is lower than this high. This point is a low, but it is lower than this low. So that is why it becomes a lower high, okay? This becomes a lower high, and this becomes a lower low. Do you guys now get it? So the next thing that is going to be formed is another lower high and lower low. Lower high and lower low. Lower high and lower low. Just a second. It has to be taken out like that. So what many people were asking, you know, how early do you know if it's a lower low, if it's a lower high? I hope you guys are getting this, because this is just one of the basics of market structure. Once you understand these two, you are definitely going to be in a situation whereby you just look at the market and you can tell if it's in an uptrend. You can just look at the market and you can tell if it's in a downtrend. And you can also look at the market and know whether it's in a consolidation. And that's what we are going to look at right away. So for the consolidation, you're going to realize that the market is neither forming higher highs and higher lows. It is just forming patterns that are not consistent, okay? Something of that sort. And that's why now at this point, we normally say that the market is ranging. You cannot say that it's in an uptrend. You cannot say that it's in a downtrend. You cannot clearly see what trend the market is actually following. You can just see that it's, sometimes making a lower low, then it goes and gives us a higher high, then it comes down and gives us a higher low. It is not consistent in the trend. The trend is not consistent. And I think that those three words make me clearly understand what consolidation is. The trend is not consistent. The trend not being consistent. Because when the trend is consistent, we can clearly see that this is an uptrend or a downtrend, okay? But when it is not consistent, the market is just ranging. We cannot tell whether we are in an uptrend or in a downtrend, or maybe the market it looks like it's just playing in one level. So that is what we call consolidation. And how I see it, according to ICC, is the market will keep on giving me the swing highs that we talked about in our last video, okay? The swing highs and swing lows, okay? So the market is going to form swing highs and swing lows. Let me just write that here. Swing highs and swing lows. So in understanding market structure, once you understand that the market is in an uptrend, now it's in a downtrend, and now it's consolidating, we need something that tells us that now the market is either going to change direction or this is the beginning of a new trend. And that is why that is where we get right into understanding indication. Okay, so I hope this is clear. I hope you guys are going to look at it, go back, watch it again and again and again, and understand this. This is the basics, guys. This is for the beginner. This is for the intermediate who thought that they understand structure. But clearly, maybe you need to add some flavor into what you understand. So now when we get into something else, let me just explain this. So this is an uptrend. This is an uptrend. Okay. This is a downtrend and a consolidation. So I want us to start from a point of the market is not moving. Okay. The market is already consolidating. So the market is just ranging from A to B, A to B, A to B. So the market has not yet decided whether it's going to be in an uptrend or a downtrend. So what happens before is what we call, what happens to tell us where the market is going to be heading is what we call the indication. Okay? So how do you know if this is an indication? And how do you know if the indication is actually valid? So you're going to see that the market is ranging from this, from point A to point B. Then the market will do something like this. Okay? The market will form what we call a new high. New high. So we assume that now we are getting into an uptrend. Okay, so the market will give us what we call a new high. So the market was, ranging right here. The market was ranging right here. And then it gave us a new high. So this is what we call an indication. This tells us, like, see guys, we're about to go bullish. See guys, we're about to go in an uptrend. So once the market does this, and the indication, as I mentioned in my previous video, could be this size, could be this big, it could even move up until there. But you really don't have to chase this move, because if you chase this move, you will end up going to be liquidated by the correction. So what is going to happen is, never be scared about the move that the market is making, because if you understand structure, you know that if the market is in an uptrend, it has to form higher highs and higher lows. Higher highs and higher lows. So this means that this same market that gave us this indication, if it's about to form an uptrend, it is definitely going to form a higher low, higher high, higher low, higher high, higher low, higher high. So what happens? You wait for this market to come down here. Okay? You wait for this market to come down here. And that is the correction that we're going to be talking about in the next video. So as I mentioned, the indication could be this small, this huge, but you do not have to worry. So what you need to know about the indication is that indications come from consolidations, okay, and indications form a new high or new low. So before we get into diving deeper into this concept, let's look at a market that is definitely consolidating like this, okay, like this, and then it does this. It forms a new low. So once it forms a new low, what does it tell us? The market is definitely telling us that right now we are about to go into a downtrend. It's indicating a downtrend. It is that simple, guys. So what are we anticipating? We're anticipating for a correction, and then we get into we get into we get into a continuation. And this concept is very simple, and I want you guys to watch these videos over and over until you understand. So this is definitely the indication. So it gives us a new high or a new low. If it's in an uptrend, it gives us a new high. If it's going in a downtrend, it gives us a new low. It is that simple. You do not have to complicate it, guys. You do not have to overthink. You do not have to think of indicators. You do not have to think of crazy things. And the only thing that I want to mention to you guys is that be focused on looking at the market on the higher time frame. It's going to give you clear directions. It's going to help you understand what happens. And there's something that I had actually mentioned, telling you that what is happening in the lower time frame is just the same thing that is happening in the higher time frame, but on different dimensions. And I want to show you before we end the video. So you're going to realize that the H1 will do something like this: higher high, higher low, higher high, higher low, higher high, higher low, and higher high. Okay, now let's assume this is the weekly time frame. Okay, so this being the weekly time frame, now we go to the daily time frame. So what is going to happen in the daily time frame will be something like this. Okay, 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 like that. So it is the same thing that is happening, okay? It is the same thing that is happening on the daily time frame, just that on the weekly time frame, just that there are more pullbacks, there are more pullbacks, and so on and so forth. Just something of that sort, Let me just remove this. Okay, yeah, something of that sort. And if this is what is happening on the 1 hour, what it on the daily time frame or on the lower time frame, what is going to be happening? Let me just change this. Let's even put it in that color. Okay, so then let's look at the 1 minute, for example. 1 minute is going to have more noise, but it's just the same thing that is happening. Okay, this is not working. Let me just delete it and give you something more concrete that makes a lot of sense. Okay, so for the 1 minute, it could be something even more complicated. Okay, just be keen on this. Just trying my best to help you guys understand structure. So guys, this is ideally what I'm talking about. like the same thing that is happening on the higher time frame could look easy to see on the eye in terms of, okay, I see it's one 4-hour candle. Okay, this is amazing. Then you go down to the 1 hour, and then you're going to see those pullbacks play out, and then you go back down to the 1 minute, and you're going to see those more pullbacks and more higher highs and higher lows being formed. So let's just briefly look at what is happening in the market, and then you guys are basically going to understand how what I mean in terms of, okay, for example, this is let's even go to the weekly time frame. Okay, so this candle, as you can see right here, these are weekly candles, so it looks like just one candle. But if you go to the daily time frame, now you start noticing the noise that is in there. Now you start seeing it, you start seeing the structure forming. And now you go to the 4-hour, you go to the 1 hour, and you start clearly seeing the higher highs and higher lows being formed. So it is ideally the same thing that is happening in all these time frames. It is just that when now you go to the lower time frame, now you're going to see more pullbacks, you're going to see more noise in the market. And that is just what I wanted you guys to understand about market structure. If this video actually gets 1,000 likes, I'm going to drop the second video about corrections. The first video performed really well. You guys loved it, and I hope you guys really will love this and are going to understand what I just explained. So we're going to continue from here to our next video, and I hope you guys liked it, and I hope you guys have learned something new about market structure. This is ideally just the foundation. So guys, that concludes our breakdown of market structure and indication. And at this point, you should no longer be looking at the chart as random candles. You should be able to identify direction, understand when control shifts, and recognize when price is signaling continuation versus hesitation. Structure gives you the framework. Indication gives you the early signal within that framework. Together they form what we call the beginning of clarity. But remember, understanding does not come from watching once. It comes from, repetition. Open your charts, go back in history, practice identifying structure, mark where indication appears. Ask yourselves why price moved the way it did. The more you observe, the sharper your analysis becomes. And what we have covered today is basically what we call foundational. In the next lesson, we will move deeper into corrections, how to recognize them properly, how to avoid being taken out during them, and how they prepare the ground for continuation moves. Everything builds from here. If you're serious about improving, stay disciplined within the series and do not skip the steps. Master each layer before moving forward, and this is very critical. And as I said, if this video gets 1,000 likes, I'm going to definitely release the next course as soon as that happens. And of course, thank you so much guys for watching, and I'll see you guys in the next one.